बिस्मिल्लाहिर्रहमानिर्रहीम अस्सलाम वालेकुम डियर स्टूडेंट्स एंड व्यूअर्स, वेलकम टू माय यूट्यूब चैनल डिजिटल लर्नर पॉइंट्स। आज के इस वीडियो ट्यूटोरियल में हम फाइनेंशियल मैनेजमेंट जिसका सब्जेक्ट कोड 8513 है और ये इस्लाम इकबाल यूनिवर्सिटी की असाइनमेंट के सिलसिले की बात है। तो इस असाइनमेंट नंबर 1 के जो कि आइटम 2022 से रिलेटेड है उसके क्वेश्चन नंबर 4 को हम सॉल्व करेंगे इंशाल्लाह। Sorbond Industries has a beta of 1.45. The risk-free rate is 8% and the expected return on the market portfolio is 13%. The company currently pays a dividend of $2 a share and investor expects to experience a growth in dividend of 10% per annum for many years to come. So what are the requirements? What is the stock's required rate of return according to the CAPM? Capital asset pricing model. What is the stock present market price per share, assuming this required return? And what would happen to the required return and to market price per share if beta were 0.20? Assume that all else stays the same. And the third requirement that you are going to be determined the again required rate of return and market price here if the beta were 0.80 means the value of the beta has been changed and keeping other things are constant. So let's move to the solution. So part 1 is the here the value of beta is equal to 1.45. Risk-free rate as denoted by RF is equal to 0.08 and expected rate of return on market is equal to on market portfolio is equal to 13%, 0.13. Dividend is equal to $2. The information given in the statement growth is equal to which is denoted by G is equal to 10%. So part 1 is equal to required rate of return under the capital asset pricing model is the expected rate of return is equal to risk-free rate is equal to beta plus beta into return on market portfolio minus risk-free rate is equal to 0.08 plus 1.45 value of the beta given in the question statement parenthesis start 0.13 minus 0.08 and expected return is equal to 0.08 plus 0.0725 is equal to 0.1525 is equal to 15.25%. So now we are going to move to the part 2 of this question. Now we are dealing with the part 2 of the question. PB of the share is equal to dividend divided by R minus C and R is the expected rate of return that we had determined in the part 1 and we are going to use as per the instructions of the question statement. So here is the formula dividend divided by R minus C. R is the expected rate of return and minus C is the growth rate of dividend. So PB of share is equal to 2 as 2 is the dividend divided by 0.1525 as you see that we have determined it in the part 1 minus 0.10 is the growth rate of the dividend which is remain the same for many years. So it is of a perpetual nature. So we will, what value of market share we will get 38.09. Now move to the part 3. Part 3 has further two parts. First we are going to be determine the expected rate of return. Then using that rate we are going to determine the market price of the share at the new expected rate of return. Expected rate of return 15.25%. So look at this. I'm going to use the same method. So 0.13 minus 0.02 0.008 plus 0.04 because in the new conditions the beta value has been reduced from 1.45 to 0.80. So our expected return is fall from 15.25% to 12%. So expected return decline from 15.25% to 12% due to the fall in the value of beta from 1.45 to 0.8. Now we are going to measure the market price of the share. So we use the same formula as we have discussed or used in the part 2. So 2 divided by 0.12 minus 0.102 divided by 0.12, and BB of share is equal to 16.67. This is the market price of the share. You notice here that when beta is decreased, your expected return is decreased, and your when expected return is decreased, the present value of the share also decreases. I hope you will find this question useful, and if you have any questions, please ask me in comment section. Then if you found any calculation regarding the mistake regarding the calculation, please also comment it in the comment section. If you want to add something from your side, comment section is in front of you. Thanks for watching. Assalamu alaikum.